Hi, my name is David Tunstall, and I'm from the Tunstall organization going to talk about Xero accounting software. It's accounting software, and it's retail, so it competes with, for small businesses, it competes with, I'd say, most head-to-head QuickBooks Online, and then somewhat competes with FreshBooks, or at least FreshBooks would like to think so, because they're after the small business market. I think, with FreshBooks, I guess you're dealing with the limitation on a true balance sheet. Their argument, of course, would be that, okay, who really needs a true balance sheet? Because if you're just a sole proprietor, you're filing a Schedule C, you don't need one. But, it depends on your business. So let's just say Xero head-to-head versus QuickBooks Online. And let's say you just like the look of Xero. It's very nice. It's pretty intuitive. It has a dashboard. It has, here's the bank accounts. I already set this bank account up. This is a test graphic design company. And then there's, so all your bank accounts and your credit card accounts, if I had any, would be on the left. And then money coming in, money going out, any expense claims, even a dashboard of my favorite accounts, if I so chose, would be on the right-hand side. So getting set up, after you've done all your chart of accounts, and technically you're supposed to add your balances when you set up. I didn't, because I wanted to show you, actually do a tutorial on this. So let's get into it. This company was converted at 12/31/2012. So the reason I did it at that date is because they're on a calendar year. And so in most US companies, if you're probably on a calendar year, because that's just the tax year. That's when your tax filings are due. And most businesses, follow the tax calendar, tax schedule. So you convert at 12/31/2012, and then what that enables you to do is then track all of your transactions for the entire year within Xero, and then you have a transactional history, and then for prior years, 12, 11, 10, however far back you want to go, what you could do is you could create journal entries. But what we're doing here is the Xero version of a conversion, and it's like the trial balance from QuickBooks. There's debit, a credit line, and then you just add whatever needs to go into the program. This is just a basic one that there's no real rhyme or reason, but I chose 12,500 as my bank balance. I am actually what I'm gonna do is I'm gonna change this to 4,000, because I'm gonna assume that we actually had $4,000 in receivables in 2012, and those receivables, will be collected on, or we'll see if they get collected in 2013. So I'm going to save that, but I've already added 2 invoices to the system. One for $2,500 for client A, one for $500 for client B. Now, if I had left the receivables balance in the conversion at 3,000, it would have been fine. But what Xero does is it says, hey, wait a sec, your balance is out by $1,000. You're going to either have to add a credit or add an invoice to get that right. So let's say the real balance is 4,000, and I just forgot to add client C's invoice. So client C, let's say the date of the invoice was sometime in December of 2012. I'm going to default the due date. If I wanted to say that it was actually due before then, I could say like January 19th. And let's say they have given us an invoice. This is our invoice, internal invoice number, but let's say they have their own invoicing system, and that's going to be like 5109, whatever. Item, there's no inventory items. but let's say we did like some work, like some sketches, and let's say the price is $1,000. The account is let's just say sales, and I've set up a feature that's called jobs. It's actually a tracking. Here, let me. I'm going to add a region to this too. East. I'm going to assume United States. We're New York. So as you can see, it goes back to this balance that at 12/31 we did. Remember I changed the trial balance or the conversion balance to $4,000. Now all of our invoices that are owed to us are equal $4,000, so it matches. It lets us go to the next step. And I haven't. The other X factor would be payable. So let's change this just so you can see this. And I have a payable in here to vendor A for $3,000, but now we're out by $1,000. So let me create a bill that we got from vendor B. Vendor B sent us a bill. It's actually due. They gave us I don't know, 2 weeks to pay. January 11th. And there they had an invoice number. Let's say that was their invoice number, and the total was $1,000. Again, we're not buying an inventory item. If we were, I could click it there. It would link to an account similar to QuickBooks items, but I'm not going to do that. I actually am buying some supplies, I guess, and it's going to cost me $1,000. It's going to be a cost of goods sold because it's going to be used in the production of those sketches, and it's going to be for the print job. It's going to be for the East region. So it's going to basically correlate with the invoice that I made. So save that. Now the payables are matched at $4,000 each. Click next, and now my company's set up. I'm saved. It says balances saved for periods from January 1 to December 31st, 2012. And now I can just get started working on the current year, which is 2013, which what I'd do would be I'd go back to the dashboard and I'd set up my bank feeds as of 1/1/13. I hope this was helpful, at least in understanding the conversion balances section and how you bring in a trial balance if you want to convert from another accounting software into Xero. Thank you.